Hello students, welcome to all for the next financial services classes. Okay, so this is third class and today we will discuss about the types of financial services. Financial services basically you can divide in two types. One is fund based, another is fee based. And today we will talk here about the fund based services. Okay, so first we'll know what actually the fund based services. So services, that is financial services, that are used to acquire asset or fund for a customer. Okay, so whichever is going to help you to provide you the funds or provide you the financial services to acquire assets or to continue your business, those all comes under your fund based services. And under this, first we'll check for the leasing. Okay, so what actually the leasing? Here you can read, so I'm not going to read this again. Okay, I'm just going to explain a little bit. Leasing is actually a contract between two parties. Okay, where one party is having the ownership of asset and another party want that asset for use. Okay, so in that case both party comes in the contract and they used to go for a contractual agreement. Okay, where the owner used to give that asset to the another party for use under the condition is what it is for a certain period of time, fixed period of time, and the user has to pay the rent, okay, in the form of periodical payments. It helps the user to continue with the business, continue or use of the plant and equipment without making any huge investment. Party don't have to do the investment, don't have to buy. They have to just go for the contract with the owner and then they have to make sure they are paying the rent. So you can get your plant and machinery and you can continue the business. Okay. Then next we'll go for hire purchase. Okay. I hope and I'm sure you have studied earlier also this. So what actually the hire purchase we'll check out here. Hiring of an asset for a period of time and at the end of the period purchasing the same. Okay, so you're going to hire some asset for fixed period of time and then at the end of the period you are going to buy the same asset. Okay, you can't change it, the same asset you have to buy, and it is mainly used for financing of consumer goods and for selling the consumer goods. Okay, next we'll check out bills discounting. Bills discounting, which is an agreement whereby seller recovers an amount of sales bill from the financial intermediaries before it is due. That means you have sold some items on a credit basis to another party. Another party has issued a bill, okay, and you want the payment right now, but actually that bill is going to mature in the further 10 days, 15 days, 30 days, 90 days, but you can't wait. So in that situation the same bill you can get it discounted with the financial institutions which are involved in the providing bill discounting services. What they used to do, they used to buy your bill and do the payment, but not the face value of the bill. Okay, they will give you the some amount which will be arriving after deducting from face value. You have to deduct the discount account amount and then you will get the remaining amount which you can use for continuation of your business or your whatever the requirement. Okay, and the amount of discounting depend upon the paying party, their market reputation and their financial background. Okay, next we'll check out housing finance. So as very simple, okay, so many banks are there which used to provide you the loan for housing. So that is either you can go for the construction of your house and then if you want a huge amount you can again go for the financial institution and avail these services, or if you want to go for the renovation of your house and if the amount is bigger then again you can go for the availing of this type of loans. So financial help you are going to get to construct your own house. Okay, then next we have to go for the insurance services. Insurance services in short just going to help you to provide the safety from any uncertain collateral events, okay, unforeseen, which may happen, but there is no surety that it will happen, but which may happen, and you want to keep a safety guard type of things in advance. As we used to say, precaution is better than cure. So same way here also it works. You are going to in advance ready, proactively you want to go. So you are going to avail these services, and it is available for your general insurance also and for your life insurance also. Then next we have factoring. Factoring, where a financial transaction, it is also where one company which sells its accounts receivables to the third party, and that third party called as a factor, and this selling of account receivable also at a discount in exchange for immediate money which the party need to continue their business, and which party may need for the meeting of their urgent requirements. So it actually the financial service also which helps to reduce the pressure from the first party who has sold their account receivables, because now you don't have to take tension about the collection of your account receivables. Now the tension will be taken by your factor. Okay. Then next we have the same venture capital. Venture capital in a very small line, long term risk capital to finance some new enterprise or some established enterprise also, where you are the financier who is going to finance. Actually that financier is going to act as a co-promoter. Okay, so we know very well in such type of business risk level is high, but same time you are having a assurance that there is a potential high return also, not now, maybe after some time. So just for the expectation of that potential higher return, you can go for the investment, and such type of long term risk capital known as a venture capital. Thank you.